Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 24th of March 2021. Alright everyone, let's jump in. So obviously, the biggest bit of news of the last 24 hours was that Uniswap v3 was detailed in all its glory. Now, I know yesterday on the refuel I was saying that I was expecting it any day now, and here it is. But there is a little bit of a caveat here that this is just the details of V3. It is not actually going live on mainnet until May 5th. It's going on testnet in the next few days, which is cool, but obviously what everyone's waiting for is the mainnet release on May 5th, and then shortly after that, they're saying that they're going to have an L2 deployment on Optimism. So, basically confirming that they're going to be building on Optimism, which we all pretty much already knew about. And also, saying that it'll be going live May 5th, which is, it's not too long. It's about 6 weeks away from now, which isn't too bad. It would have been cool to see them launch this week or something like that to end out March on a pretty high note. But, it is what it is. So I guess there's a lot to talk about here, right? And I'm sure you've seen, plenty of people on Twitter talking about this today and kind of doing breakdowns of it, what the implications are and everything like that. But basically, the major features of V3, so there's a few. I guess like the biggest one is the what they're calling concentrated liquidity. Now, basically, if you don't know how, AMMs work or how curves work in general, I suggest going and reading the post for a full breakdown of this, but I'll do my best to kind of explain it here. So when you provide liquidity on Uniswap as it exists today on V2 or even V1, you're providing liquidity for basically the whole curve. Now, what ends up happening is that the whole curve goes from like 0 to infinity. So you got this curve, you got $0, $0 and then infinity, and then the price trades between that. Now, what concentrated liquidity aims to do is make it so that liquidity providers can actually specify the price range that they want to provide liquidity to. So, for example, say you want to provide liquidity for ETH, but you only want to provide it for the $1,000 to $2,000 price range, right? And you might wonder, why would you do this? Well, you would do this because you need to provide less capital to get the same or more kind of fees from the trading that happens on Uniswap, right? So what ends up happening is that you can provide less capital or less LP, right, than you would have to on Uniswap V2, like much less, I think. And then you could actually go and do something else with that money, which is really, really cool. So basically, if the price was to move below $1,000 or above $2,000 and you haven't changed your kind of profile of LPing there, then what would happen is that you wouldn't get any fees from that anymore. The people that had the, liquidity in those price ranges outside of your one would get the fees. But yeah, you can always kind of adjust it on the fly. And, a lot of people were speculating, well, this kind of is going to lead to, very complex kind of strategies popping up around this. So you're going to see this will basically be someone's full-time job to come up with the most profitable strategies and, providing the most liquidity in a price range essentially and capturing the most fees between that price range and then constantly moving it. And now if this sounds like to you like a classic market maker on a club exchange or a central limit order book exchange, like just a classic order book, then it is, right? Like the innovation that Uniswap brought to the table is that it's passive market making, right? Where anyone could LP and then, on the AMM and then, the trading fees would be captured by the passive LPing. Now we're kind of venturing into a territory where that's not going to be an optimal strategy anymore because of the fact that to capture the most fees, you're going to basically have to monitor your liquidity provider position at all times because of the concentrated liquidity. So there is a trade-off here. And the other trade-off is that, as you can imagine, all these positions, when you provide liquidity, you get LP tokens back and they're fungible with each other, right? Every LP token for the ETH DAI pair is the same as every other LP token. Whereas with concentrated liquidity, all the positions are unique, right? Or at least most of them are unique. Like I guess if someone has the same kind of price range as you do, you can kind of probably wrap those up and kind of like put them in an ERC20 or something like that, something like NFTX does. But generally every position is unique, which means that they can't really be used as collateral within Aave and Maker, like I was discussing on the refuel the other day, where using LP tokens as collateral. So that's another drawback there. But I think there are ways around it, and I saw a bunch of people kind of talking about that. So that is the killer feature that's coming in V3. if it works like as advertised, which I'm sure it does, I don't think they would have put this out there if it didn't work as advertised. The capital efficiency here is absolutely massive, right? Absolutely insane. You can see here that if two people had $1 million to deposit, and one of them deposited it $1 million and kind of like LP between the price range of $1,000 and $2,250 for ETH, they wouldn't have to LP the whole $1 million. They could LP, I think, $184,000 instead, and still capture the same amount of fees or more fees. They say you'll capture a lot more fees than you would have having to kind of like, I guess, provide the entire $1 million of liquidity. So you can go do whatever you want with that. And, this is a theme that I've been watching for a while within the DeFi space, is this theme of like efficient capital, right? Because there's so much capital that just does nothing. If you think about it, right, there's so much capital in a Uniswap LP pool right now, or even SushiSwap or whatever, that just sits there and does nothing because the ETH price hasn't gone below $1,000 for months now, right? So there's no trading happening there at all. And ETH hasn't gone above $2,000 for a little while, hasn't ever gone above like, $2,500 or whatever. So there's all this liquidity that just never gets kind of like, I guess used in either direction, right? Until the price moves up there. This would be like a market maker on an order book exchange, putting, I guess like, orders at like, under 1,000 ETH, under $1,000 ETH. Yes, maybe one day it gets hit, but like that's not an optimal strategy for a market maker. An optimal strategy is basically placing orders around the, I guess, as close as you can get to the current kind of spot price of the asset. So that's what this kind of like concentrated liquidity does. It's basically a hybrid, I guess you could call it, between AMMs and CLOBs, which is pretty cool to see. But I think the trade-offs here are actually worth it. And I don't think that this is going to be the death of like passive LPing. I think there's going to be obviously SushiSwap still exists, and I don't think they're going to go for concentrated liquidity. Maybe they do one day. But for now, anyone who wants to be a passive LP can on SushiSwap, and can still do it on Uniswap V2. But yeah, I guess like eventually most of the liquidity will move to V3, and it remains to be seen how it plays out. I mean, if the volumes really are this high and the capital efficiency is much better, then I think that I don't see who's going to be LPing on the on SushiSwap rather than Uniswap. There might be liquidity incentives with the tokens and stuff like that. But kind of outside of that, it just becomes a little bit of a I guess like open question, like what's going to happen there. So yeah, that's the killer feature. If you want to read more details, of course, this will be linked in the YouTube description. But that's essentially how I understand it. Any errors there are my own. I studied it today and I had to wrap my head around it. And as I was studying it, I was like, holy shit, like this is huge, right? If this works, this is absolutely massive. This unlocks so much capital within DeFi. Like in Uniswap, there's billions of dollars, right? And a lot of that money is just not doing anything. So if you can basically, reduce, I guess, overall 80% of the entire capital needed to power Uniswap and still capture the same fees or more fees from the trading volumes, right? Because at the end of the day, TVL is like a meme metric, because you can have TVL just doing nothing, right? Doing absolutely nothing in the system, and then it's just like dead capital. Whereas what matters is the fees generated by the platform and the volumes generated by the platform. So for Uniswap, the only thing that matters to LPs are the fees that they're earning and the kind of volume. The fees come from the volumes that are being generated. For MakerDAO, all that matters is the stability fees for the system, right? That are paid by people who are taking out leverage. Now, you can imagine how many people have taken out leverage in MakerDAO, have a lot of ETH backing it up, but their liquidation price is really low because they're scared of being liquidated. That is dead capital, right? It's just very inefficient. Yes, you're scared of being liquidated, but there are much more efficient ways to do a leverage position. So, there's that as well. I mean, and this is everywhere. So what might end up happening is you may see a lot of TVLs kind of, I guess, like shift. So you may see a lot come out of Uniswap, during V3, and then a lot of that go to something like, Compound or Aave or whatever, more of the capital intensive kind of products because of this. So it's going to be interesting to see, I guess, what happens here. The other features include basically range orders, which I think are kind of like, your classic order book as well, where you can set orders at different ranges to execute. There's also flexible fees, so you can set a fee of 0.05%, which is actually extremely competitive with something like Curve. So this is another thing I didn't mention about this concentrated liquidity. is, people were saying, okay, this is a curve killer because you can concentrate the liquidity for stablecoin pairs to like very, very low kind of, I guess, prices. Obviously, because stablecoins ideally don't, shift too much, right? And because of that, and because of the fact that you can set a low fee here, people were like, well, this is going to kill curve. And I mean, I don't think it's that simple at the end of the day. I hate when someone says, oh, this is going to kill that, or this is going to obsolete that. It's such zero-sum thinking. And this is why I've always hated Ethereum killers as well, because it's like, you're not going to kill Ethereum, right? Just focus on adding value in any way you can. Like, Ethereum is going to thrive, and you as another layer 1 blockchain, maybe you can thrive as well, if you find a use case, or if you find some kind of thing that Ethereum doesn't have. Because Ethereum can't be everything to everyone at the end of the day. As much as we would all love it to, it can't. So, and the same thing happens with all these apps. It's like, this is the X killer, this is the Y killer. It's like, it's never going to work out like that. I do think that Curve is going to keep innovating. They have a massive war chest at their disposal too. They have a really good liquidity mining program to incentivize stablecoins to go in there. So I don't buy into that kind of rhetoric. But outside of that, there's also 2 other fee parameters here. Obviously, the 0.3%, which is the standard Uniswap LP fee parameter now, and 1% as well. So, it's going to be fun to see what happens here. I mean, this is very similar to what Balancer has, except Balancer lets you set like a, obviously, I think up to 5% in fees and stuff like that. But I think Uniswap opted for kind of simplicity here, where obviously the 0.05% is probably going to be used for the stablecoin swaps. 0.3% is just your standard, and 1%, I'm sure there's a use case for that as well. So there's that, the flexible fees, and they briefly mentioned about, the Uni token, or at least the I guess, Uniswap governance being able to turn on fee capture for the Uni token. I wouldn't expect this to go live for quite a while. Uniswap seems to be taking an approach where they're kind of like building for the very long term here and don't actually care about capturing fees. And why would they? I mean, look at the Uni token's value right now. It's the most valuable DeFi token, and it's literally has no fee capture because it's the most valuable based on how much it's going to grow into the future and this kind of prospect of turning on this fee capture eventually, which I believe eventually it'll be turned on, but I don't think anytime soon, that's for sure. Other features include advanced oracles, so they've upgraded their kind of like TWAP oracles that are being used, I guess, like sparsely within DeFi. I'm sure more people are going to use them as time goes on. And I guess the last interesting thing here was their license. So for those who don't know, every kind of piece of software has a license behind it, even open source software. Now, your software can still be open source, but you can still have a copyright license on it, where anyone who kind of like takes your code and reuses it doesn't have your permission to, you can go after them and you can request them to take it down, and if they don't, you can get the law involved essentially. Now, the way that Uniswap has done it is that they've licensed their V3 core code base under what's called the Business Source License 1.1. But only for 2 years. So it's basically a time-delayed thing where, you can't copy and, directly copy Uniswap's V3's code base and use it for your own project and monetize it or whatever for 2 years. And after 2 years, it goes to a GPL 2.0 license, which basically allows you to essentially use it as you would in general open source software. So, and that will last into perpetuity. And they actually mention here that Uniswap governance can either accelerate this, well, they say can accelerate this. They also can probably push it back as well, I'm assuming. But yeah, this was interesting because people were saying, okay, well, if Uniswap V3 comes out, it's just going to get forked straight away. Someone else is going to copy it and blah, 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 and whatever. And this prevents that. If you want to be a named team within the ecosystem, if you're not completely anon, right, and if you copy this code, you're going to get wrecked. Like Uniswap's lawyers, I mean, I'm sure they have like one of the best legal teams in the world, considering how much money they have. They're just going to come after you for that. And I actually don't blame them for this. Like, imagine if you work really, really hard on something for a long time, which V3 has been worked on for a long time, and then straight away someone just copies it and beats you to market and just does it in that way because they don't really care about security or whatever. That would piss people off, right? So I think they found a happy middle ground here where they're basically time delayed it. So by the time it becomes open source, it's been 2 years, right? It's been a very long time, and by that point, I'm sure there's going to be other innovations too, right? And maybe it's not even worth copying it at that point. So yeah, I actually like this. Even though I'm a big proponent of everything being open and open source. I mean, it still is open source, right? But I'm not a proponent of projects just straight up like stealing. I mean, it's not stealing the code, but like just copying it and not doing anything with it and just like copying other people's work. I've always hated that in this ecosystem. But that's the ecosystem that we're in, right? And things being open source is beautiful for like cross collaboration and people forking stuff, making it better. But at the end of the day, there has to be a middle ground, right? You can't just like launch something that you've worked on so hard and you fund it out of pocket, you know, and then someone come along and copy it with no work. So, I mean, I like this. I do like this. And I know people have other opinions here, and that's fine. You know, this stuff can probably be reverse engineered anyway using a new code base, right? But it does take time. You need to get audits and stuff. So you're basically putting, you know, the burden on people who want to fork you to actually do it in a way where they actually have to recreate what you've built, which I think is fair enough. So basically, that's I guess most of what they announced yesterday. They got, you know, the launch details here and everything like that. As I said, the smart contracts are going to be deployed to Ethereum testnets in the coming days, so you can play with it on there. But, you know, most of us don't really use the testnet, so that's fine. But I feel like I'm going to use the testnet for this because I want to play around with this. I want to see how it all works. I want to actually, you know, get in the weeds of things because I think it's very interesting. And yeah, that's it. So I guess patiently waiting for May 5th, you know, the mainnet launch. And then I don't know what shortly after means for the L2 launch. You know, I don't know if that means like a week after, a month after. They kind of, you know, left that open. And I'm also speculating now, is Optimism delayed, right? Like, is their mainnet launch delayed from March? Because they said they were launching in March, and there's a week left of March, and I haven't heard anything from them. Like, we haven't heard anything from them all month, basically. So, you know, I guess, like, I'm taking this the approach here where I think that it's going to be delayed a bit. I don't know if it's going to launch, you know, in April now or launch in May. I know there's other L2 solutions also going live soon, like Immutable X and Arbitrum and stuff like that. You know, I think in this ecosystem, I'm used to delays at this point, so I think we all should be. But yeah, a little bit disappointing here. Hopefully Optimism still surprises us and launches either, you know, maybe this week or next week or something like that. But yeah, I think this is kind of like a sign that maybe it's delayed a bit here. Or, you know, I'm not sure what they would launch with, right, when they launch. Like, I know they've got synthetics. I'm going to talk about the update that Kaiynne posted a bit later. But basically, yeah, we'll have to see how that plays out. But still, very exciting. You know, the next few months for Ethereum are like super exciting. And, you know, Kaiynne actually put a tweet out about this, which I'll go over as well, you know, over the next few months and kind of like what that means for Ethereum. So, yeah, exciting news from Uniswap. Really great to see this finally out there. And, you know, we'll see how this evolves over time. So I guess the other biggest piece of news from the last 24 hours was that Elon Musk announced that you can now buy a Tesla with Bitcoin. And not only did he announce this, he said that Tesla is using only internal and open source software and operates Bitcoin nodes directly. Bitcoin paid to Tesla will be retained as Bitcoin, not converted to fiat currency. So pretty big, right? I mean, there's going to be a lot of people who are Bitcoin rich who want to buy a Tesla. And this is just a perfect way to allow them to do that without having to cash out their Bitcoin. And they also know that if they buy it with Bitcoin, it's not going to be converted to fiat, which means that if, you know, this is just adding more pressure because maybe someone, I guess, cashes out Bitcoin and then, buys a Tesla with Bitcoin and then goes and buys more Bitcoin. So it can be long-term good for the Bitcoin price, I think. And obviously, anytime Elon Musk talks about anything in general, he's got like, 50 million Twitter followers at this stage? Yeah, almost 50 million. You know, obviously, that's going to reach a lot of people. It's going to make a lot of headlines. So pretty bullish in general, I think. You know, the price action's been kind of muddy lately, but I think, you know, maybe we're setting up for a nice April. We'll see how it goes. But yeah, pretty cool to see this. I hope ETH's next for sure. So speaking of, I guess, like, ETH being next and kind of like, I guess, fundamentals and the price being kind of muddy lately, antiprosynth put out a good tweet here basically saying that feeling when fundamental metrics and relative market cap are literally reversed, Ethereum even settles more ETH over $13 billion a day than Bitcoin settles BTC, less than $12 billion a day. And to top it all off, transacting ETH on Ethereum is cheaper than transacting BTC on Bitcoin. So essentially what Anti is kind of pointing out here is that Ethereum's fundamentals are, I would say, stronger than Bitcoin's right now. You know, in terms of like network usage and fees paid and, you know, just sheer amount of builders and developers and sheer amount of apps. Obviously, you can't really build anything on Bitcoin, but like, you know, and it's funny because you would expect ETH to be kind of like performing better against Bitcoin, and it's sad to see that it isn't. I do think that's just a function of the fact that Bitcoin kind of owns the macro narrative. You know, it's Bitcoin, Bitcoin, Bitcoin everywhere. You know, all these companies are putting Bitcoin on their balance sheets. I just spoke about Tesla, who's done that. And at the end of the day, that's what a lot of the outside world sees. If we want the outside world to pay more attention to Ethereum and value ETH, and we want the ecosystem to value ETH more, then we're going to need that. We're going to need more mainstream attention. Like, you know, how many talking heads go on to mainstream media and talk about ETH? There's hardly any. How many do it for Bitcoin? There's so many, right? Like, I mean, all the time. And that's kind of the divide that we're seeing, is that even though Ethereum's fundamentals are so much stronger, what ends up happening is that because Ethereum doesn't have that mainstream attention, and Ethereum has a lot of enemies as well, and a lot of, I guess, like, it does have problems too right now with the high gas fees and stuff like that. It causes this kind of downward pressure, and it causes this kind of like pause in people. They're like, oh, why would I buy ETH when I can buy Ethereum Killer XYZ, for example? So yeah, that's unfortunate to see. And I mean, and that kind of like segues into what Kaynne's tweet was talking about today, which I thought was pretty good. And he basically says, why are we seeing both macro, crypto, and DeFi market consolidation right now? Often there's no explicable reason. Right now, I think there are many good reasons. It would actually be weirder if the market was not moving sideways. Let's explore. He's got this whole tweet thread here. I'll let you read it yourself. But I guess the TLDR here is that right now, especially within the Ethereum ecosystem, there's a lot of risk, right? There's a lot of execution risk. Because if you think about it, like, as much as we all believe that, we're going to execute, and I still believe that, the execution risk of layer 2 is quite high, right? Is it going to work as we expect it's going to work? And I think most of it will, some parts won't. That's just the nature of new technology. Some parts we'll have to deal with. I think the fact that liquidity is going to fragment is going to be a bit of an uphill battle for the next few months to kind of not centralize that liquidity, but like, unfragment it, so to speak, or defragment. I think that's the reverse. Over the next few months, there's obviously the 1559 launch. We want that to go live in July. We say it's going to go live, but is it actually going to go live, right? And I believe it will, but you never know, something could happen. And there's the merger, which doesn't have a defined timeline. Could happen end of year this year, could happen early next year. I'm betting on early next year, hopefully like very early next year, like January, February sort of thing. So, but all of this leads to this kind of like, I guess, risk in people's minds, like, and this uncertainty. And markets hate uncertainty. Any kind of hint of uncertainty, markets absolutely hate it. You see this play out all the time. So I think Kaynne has a very good point here. I think that Bitcoin doesn't suffer from this like Ethereum does, unfortunately. It always amazes me that Bitcoin can do absolutely nothing on the protocol level. Don't upgrade. No building being done. It can literally just exist as it is and still, dominate in price and still be $1 trillion asset. And I think that's a function of the fact that it doesn't do anything. I think that people kind of like that to an extent, right? They like that there's no, I guess, like execution risk and Bitcoin's going to be around forever. I mean, I don't agree with that, because I do think there's kind of risk with holding Bitcoin in, the medium term, I guess like the next kind of decade or so, in that Bitcoin's security profile is not great, and security kind of, I guess, like, once the block rewards kind of like halve enough, unless the price of Bitcoin is like $1 million plus or something like that, it doesn't make up for that, and then the network becomes insecure. But that's like really deep into the crypto weeds. Like your everyday investor, even the companies putting it on their balance sheet, they're not thinking about this. This seems like a distant problem to them. And they're just thinking about the next few years, because a lot of them will probably sell at some point, right? They're not going to hold it forever. So from that point of view, that's the least risky thing for them. Then they look at Ethereum, right? You can imagine a public company that has, funds that are in their treasury, that they're beholden to shareholders. They can't just willy-nilly ape into anything. They want to get exposure to this asset class. And most of them look at this and like, okay, what's the least riskiest thing? Well, obviously it's Bitcoin. Has the most liquidity, right? Has the most defined, I guess, like, I guess it's not even a roadmap, right? Just, it is Bitcoin. It is what it is, right? It has the biggest community, has the most awareness, and that's the first thing they buy. I mean, a lot of us bought Bitcoin first, right? Before we delve deeper. But then they look at something like Ethereum, and they might realize the value, but they also realize the risks associated with Ethereum and the execution risk. And this isn't to say that it's bearish. It's actually bullish that they're probably not going to buy Ethereum till much later, right? Till a lot of this risk is kind of, priced out, or at least this de-risking event, because they waited for a long time to get into Bitcoin, mind you. Michael Saylor didn't buy Bitcoin till like, and he's the one who started it off, till like $10,000. That's a long time. And this was $10,000 the second time, or at least the third time, I think. Not 2017, during 2020. So if you look at that as well, Bitcoin took a long time to enter the public balance sheets of these companies. So essentially, and I think, looking at Ethereum, they just see all this risk and they're just like, okay, I'm just going to wait until all this risk passes. Maybe I'll miss some gains here, but I don't care. There'll still be more left for me down the line, sort of thing. So that's, it doesn't just apply to these public companies. That applies to a lot of investors in this space, unfortunately. And there's no denying that there's risk there. But for me, the more risk, the more reward. And I actually don't think there's that much risk there. I think that there is, obviously an element of it, but I think it's overblown. I do think L2 is going to live up to the hype. I do think that EIP 1559 is going to ship in July. I do think that the merge is going to happen, as soon as possible, being early next year. And I do think that, ETH2 is going to be everything we want it to be. With obviously, it's already live with proof of stake. We're going to have sharding, and we're going to have all this massive scalability. So for me, the execution risk just isn't there, right? I still buy ETH all the time. I'm fine with the volatility, but for a lot of people, they're not. They're not fine with the volatility because ETH is more volatile than Bitcoin at the end of the day, and they're not fine with the risks, it is what it is. So, eventually we're going to get to a point where that's going to go away and Ethereum and ETH will become de-risked for these investors, but it's going to take a little while, I think, and that's okay, right? Maybe more time for us to accumulate. Who knows? Not investment advice, of course, but I think it all makes sense. And definitely go check out Kaiynne's thread because he does a great job of breaking it down as well. So Hermez Network, I've spoken about this team before. They're a layer 2 team, basically doing, ZK rollups focused on payments. So essentially, an alternative to ZK Sync, which you all would have probably used in Gitcoin during the latest matching round. So they're live on mainnet today. You can go to wallet.hermez.io. You can test it out for yourself. They've got a blog post here that basically describes their mainnet launch in more detail. So you can go check that out as well. Just another layer 2 solution online, right? I mean, these guys came out, like a few months ago. I heard of them and they just came out of nowhere. And I was like, okay, wow, another layer 2 solution coming up that I didn't even hear of until now. And I just thought that was really, really cool. So yeah, I mean, more competition, more alternatives. I don't want there to be like a, one layer 2 wins all sort of thing. I don't think it's going to be that. So yeah, it's really great to see this out there. So definitely go check this out if you haven't yet. So Synthetix put out an update on their optimistic Ethereum kind of implementation that's been going on. So for those who don't know, they're rolling out Synthetix onto Optimism over various phases. So phase 0 is complete and they've been live for a little while. Phase 1 is next, obviously, and that's got a bunch of different features coming in. Then they have like phase 2, 3, and 4. And they basically said that essentially here, they were answering a question like, why has it taken longer than initially expected to reach phase 1? Basically the engineering effort here has taken longer than expected. The Optimism team has taken longer than expected to, take the learnings from the phase 0 and apply them to phase 1. And then they go on to say, what needs to be done before phase 1 comes out. It's basically waiting on the Optimism team to essentially finish preparing optimistic Ethereum for these additional contracts and stuff like that. This is just another sign to me, unfortunately, that Optimism is probably not going to launch in March, as a mainnet kind of capacity here. Maybe they do. I mean, there's still 7 days left of March or whatever. But, this coming out at the same time as like the Uniswap stuff and, I don't know. I feel like an April launch is more realistic at this point, which I guess isn't that far away, but a little bit disappointing because we all wanted it to go live in March. But I won't harp on about that. I would rather them do it safely, right, and make sure that it's secure before going to mainnet, and then there being a massive bug and like $100 million being like stolen or whatever. I would rather that not happen. I'd rather them take their time. So I think I'm fine with this as long as it's not too long of a delay. We need this ASAP, right? We're bleeding users to other kind of chains that are offering these lower fees and stuff like that. And that's not bearish for Ethereum in general. I think Ethereum is still succeeding and still fine. But I want users to experience the Ethereum that like we all experienced when gas fees were cheaper, right? The one we all know and love that still exists today, but these other new users have just been priced out of it, right? No one can, realistically, the new people coming into this ecosystem haven't made like massive gains over the years on crypto already. So for them, they don't have these kind of like, I guess, ETH gains that we all have to spend on gas fees. And we're fine with it to an extent, right? Maybe it annoys us, but for these new people, they're just like $50 fees, like get lost. I'm not paying that. That's a lot of money, right? $50, like, and I totally get that. So, I'd rather just this stuff and this technology be deployed in such a way that is very safe and secure, because a lot of the people transacting on there are going to be new users. So we obviously don't want their first experience of layer 2, the solution that we've all said is going to kind of like, make the fees cheap, to be one in a very negative way as well. So yeah, definitely we'll keep an eye on this, we'll keep tabs on this, and we'll see how Optimism goes here. So Arthur0x put out an interesting little mini tweet thread here, and I'll read out what he said. He said, if you guys keep buying worthless layer 1 tokens with no unique value proposition, no users, no developers, no applications, aka a ghost chain, this super cycle thing might not happen. Allocate your money wisely, guys. And then the second tweet says, as if the market never learns its lesson from hundreds of layer 1s that launched from 2017 to 2018, and they're as good as worthless now, or most of the market participants now are formed by the new wave that never experienced 2018 before. And then third tweet here, even dogshit layer 1 is oversubscribed in their public sale now. Blockchain built for enterprise adoption is absolute horseshit. It's proof of swindle. It has never worked, will never work. Stop throwing your money away. I don't want to relive 2018. I wrote more about this in the newsletter today, so I'll only go over this briefly here. You can read the newsletter for more on this. But he is so right. I mean, it's frustrating. As someone who lived through 2017, 2018, 2019, saw the hype of 2017 of all these other chains and then saw them completely die in 18 and 19, seeing it repeat itself during this current cycle is really disheartening and really saddening, because I thought the market had at least wisened up a bit. But the simple explanation here is that we have so many new people coming into the ecosystem. They don't know what's good and what's bad. They're fed a lot of hype. They're fed a lot of promises. And I don't blame them for falling for this at the end of the day. Back when I first got into crypto in 2013, I fell for everything. Like, I was just like, I mean, it was so bad. And it wasn't even Ethereum back then. It was just like forks of Bitcoin. I was such a noob. I think I was like 21 or something like that. It's like early 20s, only had a little bit of money, had, rich, kind of like diamonds in my eyes, being like, oh my God, I'm going to make so much money. And, no, of course I didn't. I mean, I don't think I lost any money. I think I ended up just like selling what I had left in Bitcoin and just kind of exiting the markets. That's exactly what's happening right now with a lot of new people coming in. They obviously see all the gains that's being made. They kind of like do some cursory research. They kind of find these different things, and they're like, well, okay, Ethereum has high gas fees, and this other chain's promising to basically kill Ethereum and like take all the developers away because it's got lower fees, right? That's kind of like the surface level knowledge, and I've discussed this with various people, and that's kind of like their thesis. I'm like, well, guys, like that's not the point. Like, I know the fees are bad, but that's not all that makes a blockchain, right? If scalability actually mattered for as much as you think it mattered for, EOS would have won, because EOS launched in 2018. They had like all this scalability, and that's not what mattered, right? EOS didn't win. Ethereum went on to grow and grow and grow. So there's more to it than scalability at the end of the day, but it's a very easy narrative to feed to new people. And a lot of the layer 1 blockchains feed on this, right? Because they want adoption for their own chain. They want to pump their tokens. And, I think it's actually to a point of where it's borderline scammy. Not to say that all of the layer 1s are useless, right? There are some out there that are actually legitimate projects doing legitimate things. But the ones who position themselves as Ethereum killers, that just, the team and the community just bags out Ethereum constantly and says that Ethereum's shit and they're going to kill it. Those are the ones that like are just like complete promise chains, complete hype. They're never going to deliver on anything. So yeah, as I said, not to say that all layer 1s are worthless, but there are so many things out there. I mean, like enterprise blockchain, enterprise adoption stuff, like it's just bullshit. Like as Arthur says here, like it's just absolute crap. It's not going to go anywhere. There's been so much money invested into this stuff, and it's just wasted. It's just completely wasted. So I'm not going to go on ranting a little bit longer there, but you can read the newsletter for more of my. It's linked in the YouTube description, of course, for more of my kind of thoughts on that. But yeah, I mean, it's just it's pretty frustrating as someone who's been in this ecosystem, and especially as an educator, right? I mean, I try so hard. I do the newsletter, I do this video every day. I'm on Twitter all the time. I'm talking to so many different people. Like, I respond to pretty much everyone that DMs me on Twitter, unless that's like a straight up like asking me for investment advice or whatever. I respond to them as best I can. But again, I can't reach a lot of these people. There's a lot of big YouTubers out there who are just shilling everything to their followers because they're just making money off them. And frankly, I think that's disgusting. And I will never do that. I'm never going to shill you guys like any tokens. And I always disclaim when I'm an advisor or an investor to a project. But a lot of people just do it, right? They just do it because they can. So it is what it is. I'll keep going. I'll keep educating, of course, and I hope you guys stick with me, while I keep doing this. And I hope that you pass on this education to your friends and family and anyone that you have an audience with, because it's going to take more than me, right? It's going to take an army to keep growing Ethereum, to keep kind of fighting back the enemies that Ethereum has and the people that want to take Ethereum's market share away or want to kind of like kill Ethereum. So yeah, we're all part of that, and I'm glad to be on this journey at the end of the day. This isn't like a bearish thing. This isn't me saying I'm going to exit the ecosystem or anything. I would never do that. But just me saying I think that we need to do better on the education front, for sure. So lastly here, a bit of positive news to end the refuel on. I know I've gone over time here, but I did want to mention this. So Gitcoin Grants Round 9, and as I've been going on for a while, it's ending very soon, I think within the next day or two. So definitely get your donations in. But what I did want to highlight here is that there has been over 130,000 contributions from over 9,000 people, and over $1 million has been raised by the community, which is absolutely amazing. This breaks all the previous records. It's amazing that we have over 9,000 people donating here, because this is a very, like, I guess, Ethereum community-centric thing where, you know, I don't expect that many kind of like people that spend a lot of time in the Bitcoin community would be using Gitcoin, right? All the people in the quote-unquote crypto community aren't using Gitcoin, but the fact that we're growing to this kind of number is just amazing. This just shows me that there's like almost 10,000 like super active Ethereum community members. And by super active, I mean like people that like spend, you know, every day or every second day in the ecosystem, paying attention to what's going on, trying to add value, right? Donating on Gitcoin grants like they've done here. Just absolutely amazing. So kudos to everyone who donated here. And of course, thank you for donating to the Daily Gwei and to ETHUB as well. I mean, obviously I'm one half of ETHUB and we really appreciate that. But yeah, just like if you haven't yet, definitely go get your contributions in before time's up. But you know, there's going to be a round 10 in a few months as well, so you know you can give then as well. So yeah, really positive kind of movements here with Gitcoin, and absolutely love that the community's come out in a big way for this. All right, that's it for today, everyone. Thank you again for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, join the Discord channel, subscribe to the newsletter, and I'll catch you all tomorrow. Thanks, everyone.